Hi everyone, my name's Brad McEwan. I'm your host this morning for our Tribeca Financial Wellbeing Panel discussion. Great to have you with us. I can see we've already got a number of people logged on. What we'll do now is, I spent 25 odd years in TV. The technical term for what I'm doing now while people log on is fill. I'm going to fill and I'm just going to chat and hopefully inform and I won't say entertain you all, but just I'll give everyone an opportunity to jump on board before we get things going in a couple of minutes. So that'll be great. Just a few housekeeping issues. We are recording this session, so you will be able to look back at it. Given this session is for you, it's for everyone that is logging on as I speak. We'd love for you to be involved. So please join the discussion with your questions. All you have to do is type into the chat function at the bottom of your screen and we will attempt to answer your questions in real time. I think we've all had a crash course in Zoom the last couple of months. I think prior to that, Zoom maybe was a slogan for Mazda or something. Zoom, that was about it. And now we're all experts in Zoom. When you do log on to the chat function, be sure to set the chat box to panelist and all attendees. So once you're all up and running there, you can fire away. And my goodness, everyone's got the coffee into them this morning. They're all very on time and diligent. We already have 37 participants. So we're getting right up there. So I won't have to chat for too much longer and you will be able to hear from our panel of experts this morning. I gather we were chatting before this started that most of us, I imagine, I think I could almost say, and Amy's smiling there, that a lot of us have already had our coffee this morning. So we're all ready to go and we're all ready to be, to find out everything we need to know. There you go. What was that, Amy? I think that was a coffee. What was it?
It's gone.
Oh yes, I know.
That's what happens with them. It's finished.
We'll get to that. But it's appropriate that we have Amy there because this morning's not just about financial well-being. It's about our personal well-being because this is the great unknown. We haven't been here before. And I suspect there's no one on this webinar that was around for the Spanish flu in 1917 or whenever it was. So it's not like we can call on the last pandemic that really impacted us. So it's really important, and hence we have Amy here today that we can talk to her and get some of the answers around how we look after ourselves. So that's really important as well. Let's just see how many attendees we've got. And we've got 40, so we're not too far away. In fact, I think we might get going because we've got a lot to get through. Just a reminder too, we will endeavour to finish at 10 o'clock or 11 o'clock, sorry. But if we go a little bit over, I know that some of you are a bit flexible. And you will be so enlightened by what we have to say that you will want to keep going. So we will stay with that. If you've just logged on, my name is Brad McEwan. It's great to host you all on our Tribeca Financial Wellbeing Panel discussion. We will hear from our panellists in a moment. I touched on earlier that these are uncertain times. We don't know what the future holds. So for a lot of us, and hence why you're on here today, we are wondering, how am I going to go financially out of what we're experiencing? What do I need to do to be financially secure? And what do I need to do to thrive in our new normal? Remembering that, what parts of the old normal are we going to see in the new normal? We'll just have to wait and see how that plays out. What I will share with you is a quick story as a former journalist and a storyteller, and Amy will tell you that we are hardwired to remember stories. I was thinking during the week of a story that my mum told me when I was younger, and it was a hypothetical story about a guy who moves into a new town, and with a gruff face, he leans over to his new neighbour and he says, "What's this town like?" And the neighbour says to him, "Well, what was your last town like?" He says, "It was terrible. The people were terrible. The facilities were terrible. The restaurants were terrible." And his new neighbour looks at him and he smiles and he said, "Well, for you, I suspect this town will be terrible." Now that stayed with me right throughout my life. And of course, the moral out of that is it's all about our attitude, and we can't control so many things going forward, but we can control our attitude. Are we going to be positive? Are we going to be negative? Are we going to worry about the things that we can't control, or are we going to focus on the things that we can control? And I think that is really important, and it's really important in regards to our well-being, financial well-being, and our mental health and well-being going forward. So a little story from me via mum that I still remember, which is fantastic. Now you can see our panelists up there at the top of the screen. There's Amy, that is Dr. Amy Silver, psychologist, speaker, and author. We'll be hearing from Amy in a moment. We have founder and CEO, Tribeca Financial, Ryan Watson, up there looking magnificent in pink. And we also have mortgage broker and lending specialist, Jason Kloszynski. So great to have you all here, and we certainly look forward to chatting with each of you. Ryan, let's kick things off. I'm going to start with you. We hear so much about financial well-being. What does financial well-being mean?
You know, for us, we've put a lot of time and energy into understanding this, Brad, and what we understand financial well-being to mean for our clients is security and freedom of choice. They're really the two outcomes or emotional feelings that people want, or that's how they define financial well-being. Now that's in the present. So if that's control of their finances and the freedom to make their own choices, and then in the future, the ability to absorb financial shock and ensure that they're on track to meet their financial goals. You know, something that we're very passionate about is people defining their own way with the goal that they're on track to live their good life. And their good life for us is whatever personally, professionally they want to achieve over the short, medium and long term. You know, we love seeing people that are not worried about keeping up with the Joneses. They understand their household, they have individual-based goals, family-based goals, and they're really passionate about ticking them off along the journey.
You discuss their goals, short, medium, and long term, and I imagine when it comes to financial well-being, they are all as important as one another on that journey to that well-being.
Absolutely. And I think I just want to pick you up on that point there too, Brad. It is a journey, and financial wellbeing, it's a journey and it's a practice. You know, it's something that, whether it's daily or it's weekly, it's something that we need to continue to focus on. That's a really positive thing. That doesn't have to be a negative thing at all. What we also see with the majority of people is they don't have documented goals. You know, taking the time out of a busy week or a busy month to document them first and foremost over the short, medium and long term, but then also start ticking them off or understanding whether they're actually on track. They don't really know where to start. And Amy can probably talk to this more later, but what we also find, you know, traditionally in a family structure, or husband and wife, husband, is that there's generally different ways that people think about. So it's very hard for people in a relationship to come up with combined household goals, to be objective around that. So therefore, you know, an advisor who's got high emotional intelligence and can help take people on a journey, we find that, you know, that can generate some really, really positive outcomes.
Okay, so in regards to the short term, Ryan, what can people listening to you now, what can we do for those victories right now, those little wins that can really help going forward?
Yeah, what's really important for us is, and what we continue to coach our clients on, is to focus on what's in their control. What decisions can they make? So a key one at the moment is clearly is cash flow. We really don't like using the term budget. Cash flow has a far more positive effect. And with cash flow, we see that people generally have two levers. So it's income or it's expenditure. Now, at the moment, the current economic environment, very difficult to control the income lever, i.e., you know, looking at alternative career opportunities, promotions and the like. So therefore, what's in people's control at the moment is their expenses. So first of all, understanding where they're spending money in the household. And then secondly, how can they review those expenses? Or for want of a better term, try and find a better deal. So whether it's a mobile bill, gas, electricity and the like, And evidence from from a lot of our clients is that people can save thousands of dollars if they're just reviewing that on a yearly basis. It really does add up.
We'll talk to Jason a little bit later about what he thinks will happen with interest rates, but we've had a question there from Tony, and there has been talk about, will we see a zero interest rate? And as she acknowledges, okay, if you've got the mortgage, but what about when you're a self-funded retired person? That's a completely different scenario.
Yeah, and this is the challenge for in this instance a self-funded retiree with their pot or their pool of money, which is in the superannuation or the pension environment. How do they generate a 5%, 6%, 7% return so they continue to pay themselves an income? This is where strategy comes into it, and without getting too technical, the risk profiling piece. So understanding how much risk an individual client or a family or a household would like to take, and then investing accordingly as well. They are challenging times, and it does provide a lot of stress. So if we go back to those key elements of financial wellbeing, security and freedom of choice, this is where having an advisor stand side by side with a client, and they can guide them through these extremely tough times. And sometimes an advisor's role is to tell clients to do nothing. As funny as that might sound, it's, better financial times will return. Sometimes people just have to do nothing.
A question's just come in from Tim. With the second lot of superannuation that will likely be available in the new financial year, how do you think it'll impact domestic consumption, and where do you think that will be channeled into?
Yeah, really interesting question. Technical question. Too early to tell at this stage in terms of, I note overnight that we've just technically gone into a recession, something we haven't seen for 27 to 30 years. What my instincts tell me is that the financial recovery in Australia will be a lot quicker than people think. I already see anecdotally, in day-to-day life, we seem to be returning to normal, whether it's, it's the coffee in the morning and the like, or, the lack of social distancing. So long story short, I think the economy will be in a much more positive position from even early next calendar year. Okay,
Jason, we'll just jump to you on that one. What do you think? What would your advice be there if all of a sudden people have some of their superannuation that they can tap into again?
Like Ryan, that's a really interesting question, because evidence has just shown really over the last quarter that really potentially those people who are actually accessing their super have been using it to fund lifestyle rather than actually being more strategic with those funds. And that is really where getting that financial coaching and asking yourself the question and saying, well, what is the best use of those funds? That's actually the smart question. Certainly there are some people who need to access those funds to fund lifestyle, but there's a big difference between discretionary spend and the must spends. So, I mean, we sort of chuckled about the coffee, but the reality is that for some of us, really, that coffee is actually the discretionary coffee. And if you're having the daily coffee, then potentially, if money is short, you should actually be using that for perhaps more important things. I know that's quite a simplistic analogy, but that is actually the truth. For those who are really struggling, who are out of work, accessing super funds to fund your daily coffee habit is probably not the best use of super.
No, and if I could just jump in there as well, Brad, I think what's going to have a much more positive effect on the economy is the JobKeeper and these other stimulus packages from the federal government. I can speak for Tribeca here. We employ 19 tribe members, and we've been able to keep everyone on full time with the assistance of the government. It's been a very positive thing. The other piece to that, we've been able to plan 12 and 36 months in advance about actually hiring more people because we've got this stimulus backing.
Ryan, from what we've seen so far, would you say that your clients, how are they handling everything that's happening in regards to finances at the moment? I know myself for a while, depending on the media source that I was reading, I'd read good news in one source and bad news in the next source. So then my head's spinning 100 miles an hour, and I just figured, you know what? I'm not going to worry about this. I will leave it to the people that know what they're talking about. Is that your advice?
It is absolutely. I think, the key element is uncertainty for some people, and especially the way that they're naturally built. For us at Tribeca, when COVID really hit and we went into isolation, we made sure that we were reaching out to literally all of those, the 500 families that we serve, having conversations with how do they actually feel. It wasn't letters and it wasn't emails. It was getting on the phone. It's important that they hear our understanding and our empathy in our voice. And we want to hear what their concerns are. What we found for some of our retiree clients, their concern wasn't so much for themselves, but it was for their kids. How are their kids, going through? Is there a kid or is there a partner of that have lost their job? And the questions were around what impact might that have on their household, and how could I potentially help them as well? So we saw people who were positively, funded in retirement. It was more about, their family tree, for want of a better term. So their kids or their wider network and how they were struggling. So what we actually saw was we had a number of our engaged clients who were introducing people from their network and just having conversations to see how we could help people.
Okay. And a question without notice, if you had a crystal ball, and I'm not sure that you do, but if you did, and you seem very measured and very composed and very calm about everything that's happening right now, what are your expectations, perhaps short, medium, and long term from today?
I think there's certainly going to be more bumps in the road over the next 12 months financially, because the size of our economy, we're kind of beholden to what's happening on the world stage. So, whether that's China or the US, and, this is not the forum to have a conversation about Trump. So that the things that are out of our control, they're going to be the challenges. I think it doesn't matter who you vote for, but I think at a state level with Corona, Daniel Andrews has done a great job. And then if you look at a federal level with JobKeeper and the like, they've put us in the best position, I think, for a V recovery. So, bounce and then a quick comeback as opposed to a U. So I think still bumps in the next 12 months, but I think the next 3 years for Australia will still be positive. Absolutely. I can see, unemployment coming, which will come off a high, coming down, and households returning to, I suppose, somewhat their version of normal. So I think we are in a fortuitous position, and I think it's based on what our state and federal governments have done for the large part.
So it sounds like, in just finishing there with you, Ryan, it's stay the course. Just have faith and stay the course.
I think absolutely. I think have faith, be informed. We see our role for our clients at any point in time is to inspire, educate, and support. So really, two of the three things that we're focusing on at the moment, it's far more about the education and the support. So whether that's investment markets and what's happening, but it's also, I mentioned earlier, it's about picking up the phone, having those conversations. And, we have a value, one of our values at Tribeca is empathy. So putting yourself in someone else's shoes, allowing yourself to be affected by it. Really, really important at the moment.
Terrific. Ryan, thank you very much. No doubt we'll get back to you with some of the other questions that pop up. And a reminder to everybody, jump on. You've got the chat function there. Make sure you just click on all panelists and attendees. And if you've got a question, fire away. Ryan touched on empathy, which is a fantastic segue into our psychologist, author and speaker. Amy, empathy, we're seeing right around the world, Ryan touched on it, that empathy is a quality that is just so valuable right now.
Yeah, and I think it's obviously really clear that Tribeca is sort of concerned around people's holistic well-being, which is just so inspiring that that's part of what you look at when you're trying to help people. And I think that it's almost like right now we have this intense experience that we're all going through, and for us to surround each other with empathy and understanding of the difficult emotions that might come up for us, it's really important for us as as a human race to be in this together, because we are. And the range of emotions that's coming up for people is they're not new emotions. I'm sure we've all experienced difficult emotions in the past. There's some really interesting things that are happening right now, though, because, well, first of all, the emotions are sort of stacked. So we may be experiencing quite a range of of emotions, difficult emotions, all at the same time. And that kind of makes it feel quite confused. So yeah, I think there's a difference at the moment with the range of emotions all happening at the same time, quite quickly changing from one to the other. And some of our usual coping strategies are not available to us. So I actually think it's a good time for us to go deep on what is going on for us and how we support each other with that emotional context.
And I can only imagine, Amy, because of everything you've touched on, I suppose that comfort that we had, especially here in Australia, that we were safe. Things that we saw overseas, like maybe pandemics or serious financial fluctuations, weren't going to happen here. But, on top of everything else, we've seen all that trauma and stress of the bushfires, and then we had some floods, and then we've had drought for a long time, and now we've got COVID-19. The reality is, for all of us, this is something we've never had to deal with before, is it?
No, and I think it's a challenge. Usually I think we would have two extreme reactions to difficult emotions. The first is that we would distract ourselves. So something difficult's going on and we move our attention to something else, and that's kind of a really useful coping strategy. Mm-hmm. But when they come really fast, it's not an appropriate reaction for too long, because what can happen is, though, we put them behind a wall and then they break through that wall and kind of attack us at another time, usually a time when we don't want them. So that's one extreme, is that we try and put them behind a wall. And the other is that we just get flooded by them and we're just completely overwhelmed. And I don't know how much people are aware of sort of what happens when we're in an emotional state, but the clever part of our brain switches off. So it's a real primitive part of our evolutionary makeup, are these strong emotions. So anxiety and fear and sadness, they have this real value. But when they are triggered, which is kind of, that's like the core of our brain, and that's, we're not really that dissimilar from a dog or any other sort of basic animal. No, I wouldn't. My dog's over there, not basic, but that core part of the brain. And then there's this really smart, clever part of our brain that's involved with decision making and choices and complex communication and foresight and strategic thinking. And all of that is really challenged when this part of our brain is in full swing. So regardless of whether we try to usually sort of push them away, distract ourselves from them, or we let them overwhelm us, either one of those options is not great for us gaining control over that primitive part of our brain that, we like to think of ourselves as really rational, but we're not really that rational. We are often very driven by that core part of our emotional context, and which is why I think it's really important when we have got decisions to make, or we're trying to make important decisions, to have somebody who can sense check some of what's going on for us at this level, so that we can pull on the more clever part of our brains.
So do you have then, a few simple tips for those people that might be feeling overwhelmed at the moment? Because, I'll put up my hand and say, like you mentioned there, I think essentially we're all the same. Yeah. And as much as we might feel like we're keeping it together, I think we've all had moments where we just, we want to scream, we want to cry, we're scared, we're frustrated. What do we do in those circumstances? How do we able to pull it back into ourselves and then just calm ourselves down?
So my understanding of how we travel through these emotions is that we need to develop a bit of a different relationship with them. So quite often what I understand about where people are at with their emotions is that they do this thing where they deny them. Or they try to ignore them. And if we developed a bit of a different relationship and an understanding that comes from empathy and compassion towards self, of acknowledging that those feelings have a place and acknowledging that they are trying to send a message, but having the context of separation between the emotions and me. So I am not my emotions. I'm having my emotions, and trying to change this dynamic with our emotions so that they are not fused. We are able to move to a situation where we can look at our emotions. So that kind of requires a bit of a practice. It's not something that we've usually done. You know, if you think about how people have coped in isolation, this is an unusual circumstance for us to be isolated. And what it gives us this opportunity to do is to turn towards ourselves and spend time with ourselves, which again is something that a lot of people just aren't that comfortable doing, is spending time with ourselves. And it's because we're a little bit fearful of these emotions. If we learn how to communicate with our emotions, if we learn how to turn towards them and go, hey, anxiety, fear, I hear you. I can hear that you've got a very intense thing to tell me about, and I'm trying to listen to you. Let me listen to your message. What's the key message? And I always think writing things down is an awesome way to look at this sort of observer perspective, we call it, where we come out of ourselves and look at what's going on for ourselves. So writing things down, writing down what's going on in my brain, because that can sort of slow down some of the messages, and you hear them repeating, and you hear the jumps that you've made or the catastrophizing that you're doing. That is fear shouting at you and going, if you don't listen to me, these awful things are going to happen, or I'm going to try and send you a message about the future, and you've really got to attend to me. And if we turn towards it, acknowledge the message, the key message that it's trying to send us, and then tell it, we've got it. I've got the message. I understand. Now you need to calm down. It's a very sort of deliberate, sort of semantic conversation to have with yourself and go, I get what you're trying to tell me. I get it. And now I need to turn towards the other voices that may be in my head, the other people that are talking to me, the other senses. And if there is a voice that you could maybe really tune into, it would be this self-compassion piece. So I love that empathy came up before, because self-compassion, what do I need to soothe that voice right now? And it's not that those fears aren't true. Those fears may be shouting good things, but if you really let them take over, that clever part of your brain just won't be able to operate. So it's sort of like saying, okay, fear, I hear you. I'm going to write you down. I'm going to understand what your message is. And then I'm going to self-soothe, because when I'm in fear, I cannot make decisions properly. So yeah, that changing relationship piece with the voices, acknowledging that they're there, acknowledging and maybe even thanking them for turning up and giving you a message, but trying to pull on the other voices. And if you can't hear those other voices of hope or joy or gratefulness or any of the other voices that are present in your head, if you can't hear them, then direct your attention to them. So maybe try and have a conversation with joy, or with security, or with safety, or with pleasure, or with the now. So you actually can choose where to direct your attention. I always think it's like having, you've got a party in your head, and if fear is being super, super loud, it's like having a really noisy guest and at your party, and you would just sort of attend to it, kind of make it feel comfortable, but you've got heaps of other guests at your party that you need to attend to. So just making sure that you've got the balance with who you're listening to in your head will help you calm this piece down so that you can do the clever bit that your brain needs to be doing.
Amy, we've we hear from Ryan and Jason, and they are experts when it comes to finances. I think a big part of clearly in Australia why we seem to be managing COVID-19 well is we are listening to the experts when it comes to a pandemic. And even after your advice there, and people can, as Lisa's pointed out, they can jump on your website, dramysilver.com. But let's say they still feel like they need some more direction. And as a Beyond Blue ambassador for more than a decade, and I know that you will agree, is that we have to listen to everybody like yourself when it comes to mental health and well-being. And if you're not coping, put your hand up and go get the help that you need. Because as you've touched on, we're experiencing not one or two of these really stressful factors. We're experiencing a number of things, one of them being significant, being our financial wealth or well-being. So people have to, they have to learn. And if maybe there's someone that they haven't normally done that, well, just maybe give it a go. Put your toe in the water and go and talk to someone. Just see if it can help you, because from my experience, it does.
Yeah, and I think that's a beautiful reminder. I think it's absolutely essential. That it's really interesting because when you diagnose mental ill health, you use a time frame for how long somebody's been experiencing those symptoms for. And usually that period is about 4 weeks. Now, right now, people are experiencing those symptoms for much longer than 4 weeks because we're in this sort of collective trauma. So it's actually quite interesting to kind of work out, well, what is mental health diagnoses? What does it look like in a time where we're all actually struggling, or at least sort of having experiences that are quite extreme for ourselves? So I think that talking is an awesome thing to do. I think recognizing where you're at is an awesome thing to do. And I think the real trick to what you were just saying, Brad, is the idea of not being ashamed of any of what you're going through, any of the experiences that you're having. Because what can happen with emotions, and this is one of the reasons why we try and shove them out the way or deny them, is that we add on a layer of guilt about having those emotions, particularly when we know that other people are going through bad things. So if I haven't lost my job, how am I entitled to feel bad? And that whole context sort of pushes our relationship with these emotions and kind of tells them, shut up, I don't have a right to own you. Or I can't layer that onto someone else's stuff because they've got stuff. I'm the sort of person that should cope. So all of those messages to self kind of deny and push them behind that wall. And I just think that it's gone on for too long, this period, for us to do that successfully. And really what good emotional management looks like is that we allow these emotions to travel through us. We don't shame them. Yep. We don't shame ourselves for having them. We recognize them out loud. We talk to other people. We get help when we need it, because that's actually, as you say, Brad, the solution. It's looking towards the experts to kind of go, you know what, this is an experience for me. Is that okay? Where do I go? What do I do? And yeah, so I'm all up for talking about this and looking towards finding avenues to support you, and definitely being entitled to your feelings. You are 100% entitled to your feelings. There is nothing wrong with any one of those emotions that you are experiencing. They are all welcome at the party. Our job is to stay as the host and manage our emotions as long as we can. And if we can't, let's get a bouncer.
Yes. Okay. Always. We need a bouncer. We need good security. That's what it's all about. Amy, thank you. I know I have another question for you later on, but in the meantime, we'll turn to Jason. We were chatting about this the other day, Jason, and mortgages. And a question I was thinking, is it time to review our mortgage? And I found myself thinking, and this is a bleedingly obvious thing, but amongst everything else going on in the world, I didn't even think about it, but I would suspect you're going to tell me I should review my mortgage.
Goes without saying, Brad. I'll give you a call after the webinar and we can manage that.
And me.
Absolutely. It is a bleedingly obvious question. And look, the reality is, I've said this to many of our clients, is that the major banks in particular, but I would say all lenders to an extent, and all large corporate organisations rely on our apathy and almost our self-belief of our loyalty will reward us. And the fact of the matter is, as Ryan said, one of the things that we do really well with our clients is that ongoing reminder of, you know what, let's just chip away at what you're paying here for your electricity bill. Let's just chip away at what you're currently paying on your home loan or your investment property. How can we keep chipping away to give you that comfort and to improve your lifestyle so that you can focus on living a good life? And it comes back to exactly what Amy was just saying, engaging experts to do that for you and give you that comfort and take that layer of stress off. It's just one less stress if you can engage in experts to do that for you. So yes, Brad, I'm happy to have a conversation with you after the webinar.
Okay, and my interest rate has a 3 in front of it. Can we do better than that?
Absolutely. Short answer is if you are obviously employed, first of all, if you have a history of good repayments on any of your debts and you've got some equity in your property, then absolutely your home loan should be starting with a 2. And that's whether it be a variable or fixed rate. If you're paying down principal and interest on your home loan, the rate should be starting with a 2. Surprisingly, we've still got some clients that we've been working with this year who are starting with a 4, but really even 3 is way too high now.
Okay. While we're talking about homes and property, a relevant question from Constance to all of us here. If we have the means to invest in property now, should we do it knowing that the downturn that we're experiencing is by something we haven't experienced for 100 years, being a pandemic? So do we jump into property and what do we expect to happen?
Well, there's a few parts to that question. So again, engage an expert to get the advice around what that strategy looks like. So just because you can afford to do something doesn't mean that now is the right time to do that. So I'll give you a perfect example. If at the moment, now would be over the next 6 to 12 months, probably a really good time for those first home buyers that have been building deposit over a period of time and feeling overwhelmed that the market is continuing to run ahead from them. The reality is that the property market over the next 6 to 12 months is going to drop. It has to, by virtue of, there's a number of things feeding into that. But, you know, if you consider the fact that really the tap has been turned off in our economy of immigration, unemployment has continued to rise and likely will still for several more months, despite, and I agree with Ryan that I think our governments have actually done a very good job in the scheme of things, given, you know, all the challenges that have been thrown at us. I think they've done a great job with the economy, but the reality is unemployment's going to continue to grow. Now, as a result, those first home buyers who've been slowly and diligently building deposits will actually find that over the next few months that property prices will likely fall and they'll be in a much better position, 1, to capitalise on potentially cheaper property prices, but 2, coming at a time where, you know, rates are, I hate using that word, you know, historical, but historically they are the cheapest they've ever been. You know, talking about what Ryan mentioned before, the fact that the country hasn't been in recession since 91, so 29 years. I heard on the radio coming in this morning, you know, they had callers on Talkback Radio talking about back in 1991, home loan rates were up at 19 and 20%.
Wow.
So you're talking about home loan rates that are higher than today's credit card rate. So don't get me wrong, it's tough going for first home buyers, but it actually also presents a really good opportunity. Again, engage an expert before you just jump in to say, hey, this is what I'm going to do.
And Ryan, is that your thinking too? And do you expect the similar path with property going forward?
I do. I absolutely. Jason and I have these conversations all the time in terms of the property market. So yeah, it's not in question about values decreasing over the next 12 to 24 months. I believe it's just a matter of how much. And for me, that was my opinion even pre-COVID. We get, I suppose, to see behind the curtain a little bit in terms of debt levels that new clients are carrying, credit cards, a lot of Jace could talk to this, but a lot of interest only on principal residence. So that's the challenge for people, and then trying to combine that with paying private school and the like. I think in answer to Constance's question, is now the right time for property? Without sounding like a broken record, it really goes back to the family's individual plan. What are their goals, short, medium, and long term? If they're looking to upgrade in this environment and they're really looking at the family home for the next 10 to 15 years, 6 or 12 months difference in terms of timing is probably not going to matter. Therefore, it's certainly on the table. But if people are trying to time the market and be far more strategic about it, it's a much more in-depth conversation. So it's a yes, but it's based on those individual goals, both short, medium, and long term. What Tribeca calls is the 10-3 now. So where do you want to be in 10 years? Where do you want to be in 3? And then what effective change do we need to create now under the 3 advice pillars? So cash flow, investment, and contingency.
Okay. And on that, Ryan, Gilbert's just fired through a question. What's the recommended cash level you would say to have on hand to be prepared for any uncertainty going forward? Is there a percentage you would suggest, or is it a couple of months' income? Can you put a figure on it?
Yeah, we can. Our guidance to our clients under our cash flow philosophy, it's 3 months. It's 3 months of savings. So in terms of after-tax household income, you'd want 3 months, what we call sitting on the sidelines or sitting in offset account, or ideally just in an individualized savings account. So I know at home we've got a 10.5-year-old here, and I always talk to her about a rainy day fund. It's the same for our clients. That's a solid foundation. 3 months saving minimum.
So you're passing on that advice already to a 10.5-year-old.
Yeah, this is really important, and this is where education, especially financial education, starts in the family home. Whenever we take a holiday, we make sure that she has some spending money, and I'm always really proud if she saved 25 to 50% of it. I think it comes down, and Amy could talk to this better than I. It comes down to habits, forming the right type of habits and education around it. I know Jace is passionate about this as well. So, yeah, she's doing very well in terms of her savings account at the moment.
Oh, good. And it's true though, isn't it, Amy? You get into these habits and you start training your brain to think a certain way at such a young age, and you can set yourself up with these patterns for the rest of your life.
Yeah, 100%. Like habit management, or at least making the idea of the good habits being easy to do is absolutely essential. And I would say, I'm kind of not quite there with my children on the financial habit stuff. One of them's very engaged with lollies. But with emotional management, I think it's the same thing. I think it's the same message to our children and to those around us, that all emotions are okay, and they travel through and they will pass, and that we need to turn towards our emotions and not be ashamed of them.
If I could just jump in here, Brad, as well, what we've seen, not from our little one at home, but from other children as well, if they're in a store and they're asking for something to be bought, if you put the money in their hand, or, this is part of the holiday fund or whatever else, it's a lot harder for them to spend the money, to part with it, as opposed to just ask. I see Jason, he's got 2 at home as well.
Absolutely.
That's a great tip.
Yeah.
Absolutely. Now we talked around, emotions and stress and everything. And the reality is, for a lot of people, even though we knew we were heading towards a recession, and clearly we know the months ahead are going to get worse, but to hear it from the Treasurer yesterday, I know we all go, okay, we knew it was coming, but it's here. Jason, how do you think that then is going to affect those already historically low interest rates that you touched on earlier?
Really common question. The fact that we would have anticipated already quite some time ago that we were heading into recession, it doesn't really change the course, truth be told. Rates themselves, whether you speak to the economists of major banks or from my experience, I would suggest there's not going to be much change in the rates that we see from a lending perspective over the short to medium term. Certainly not in the next year to two. Perhaps out at 2022, we might see a movement in rates potentially back up. And that really depends on the timing of not so much how long we sit in recession, but how quickly things recover. So long story short, the cash rate may shift a little bit. There is a little bit of noise around, will the Reserve Bank drop the cash rate to zero or possibly even negative? The reality is that probably won't flow through too much to our home loan rates. It may have a little bit of an impact. Unfortunately, I think it was Tony that raised the point before around the self-funded retirees. That might have an impact there. But the fact is that most banks, their margins are as tight as they have probably ever been on lending. And as a result, if the cash rate drops to zero, I don't think our home loan rates are actually going to shift that much over the next year or two.
So if you mention there that most of the banks and their margin is so tight, what's your advice then in regards to going back and seeing if you can get a better rate, but then also potentially shopping around and looking at another source for your home loan?
So that's what we do for clients every day. And on a very regular basis. So we recommend to all of our families that we work with that on an annual basis, we should be checking. And again, that's where you engage the experts. So there's always talk that, yes, you should go back to your lender. The lender still relies mostly on your loyalty. And if you only go back to that bank, yes, they might give you a small win and give you some margin, but you'd be surprised at how greater saving can be actually achieved by looking more broadly. So I always say to clients, of course you could walk into your local ABC bank branch and you'll meet the mortgage specialist who'll say, hey, great, I've given you, 0.25 off. What they don't tell you is that CDE bank down the street potentially is already 0.4% cheaper. So this is again where you engage the experts. And you should do it on a very regular basis. We always recommend annually, you should always be checking. And even when I say rates are going to remain steady for the next year or two, that doesn't mean that a 0.2% discount on your home loan rate isn't going to save you significantly. People really underestimate how much 0.1, 0.2, how much of a difference that makes on their home loan rate, and boost cash flow. Frees you up to get closer to living a good life.
I think a lot of people, and I imagine we've all had this experience, Jace, where I know when I go into my local branch, and even once you start talking that way, they'll say, let's look at your details. We can do a lot better than that. And I get really angry because I think, well, why are you telling me that now? I would really appreciate, since I've been banking with you for more than a decade, that you'd actually let me know this earlier.
So Brad, it's a really good point. And again, I said this before, these large corporates, let's take away banks for a minute, because it's the same with utilities. Any of your large corporate businesses that we have relationships with, loyalty doesn't really matter these days. At the end of the day, they're trying to make a dollar. And until you raise it with them that potentially you're paying that extra dollar, they're not going to give it away. It's not in their best interests. So again, I sound like a bit of a broken record, but this is where you engage an expert to independently review the market and let you know what your options are. They will never pick up the phone and say, hey, Brad, you've been with us for 10 years. Congratulations, here's a discount. They're not going to do that. And the fact of the matter is, Brad, if they're actually looking at your file and they see that you've been a client with them for 10 years, they're actually relying on the fact that, you know what, Brad's not going to leave because he's been with us for 10 years. It actually, if anything, it emphasizes the point that you're unlikely to move.
No, 100%. You're right. Amy, I just want to go back to you on something that I know is incredibly powerful, and I would urge everyone to share right now, given, I suppose, the fragile world that we're in, and that is the sharing our vulnerabilities, sharing our own battles and our own struggles, because I think we're all very good at looking at everyone else and saying, oh, everyone else is coping, everyone's got their stuff together. I won't say shit because, you know, this is a family-friendly webinar, but what I know from experience is when people open up about, hey, you know what, I'm actually struggling with this, the person who opens up feels better, but then it encourages everyone around you, whether it's in your community or your workplace, and they go, well, hang on, I'm going to share some of my stuff as well. And we all feel better, don't we?
Yeah, it all gets a lot more real when we sort of let down that facade, for sure. And I think, you know, that's the piece that I'm certainly finding. I don't know if everybody else is finding themselves on Zoom a lot, but the idea of, for example, Brad, I know what you have on your walls at home. I like that sort of opportunity to connect with somebody, you know, on a more real level is lovely. And we have this opportunity to find out and have more difficult conversations, but more courageous conversations with each other around what's going on. So I'm finding that within families and within work, there is this beautiful sort of acknowledgement of shared experience right now, and a bit less of a show face, you know, people are holding. And I think that's just a gorgeous, opportunity for us as a human race to be a lot more transparent about what's going on. Because when you do share something, not only do you get, as you say, that space to be, but you may pick up some really awesome tips. You know, I mean, the emotional safety stuff, there is a lot out there about what we can do to self-soothe and to look after ourselves. And when you talk to someone else who's, you know, had an experience like you and tried something, it may not be the right thing for you, but there may be answers out there of ways to support yourself and those around you towards a better state of mind. Even though we're all going through the same thing, I think there's heaps to say to be more transparent and open and vulnerable. And this is a shared trauma that we're all in, that we get the opportunity to practice that with. And I think, I don't know as well, I think there's people are having really honest conversations about money and their finances, and there's lots of more truth going on, which I know is part of Tribeca's values is honesty, but that real truth, that where there is that opportunity to make real connections and really understand what's going on. I think we're in a really interesting space as evolving humans.
Yeah, absolutely. Too true. Question from Wendy. We'll head to you, Ryan. So many unknowns around finances right now. What would you recommend for managers and employers in regards to talking to their team members? Because there are so many unknowns around, you know, job security and wages, and a lot of people we know are have had to take wage cuts. They don't know what the future looks like. How do you address these financial concerns going forward?
I think there's a really big opportunity here for the right type of employers. We know that, you know, a lot of businesses run wellbeing programs, and a key component of that is financial wellbeing. So I think there's an opportunity for employers to bring in experts in that financial wellbeing space, really on an education mandate. So on a business to business, and come and educate the workforce around that. As we've discussed today, you know, running sessions around goals, but also understanding of cash flow and concepts around that. I think there's a really big opportunity. I think it's unfortunately it's largely missed by a lot of corporates these days. So the key thing would be for managers or employers would be, try not to take on that yourself. If that's not your skill or your expertise, don't take it on. Obviously, you know, we've discussed today a lot in terms of the empathy piece. So, you know, 2 ears, 1 mouth, listen to what the employees are saying, but then with the opportunity, whether it's through an employee survey or the like, garner the interest of employees to take up those types of sessions. So isolation makes it slightly harder, but obviously through sessions or Zoom sessions like this, you know, a lunch and learn or something around that, where you can run multiple sessions, maybe on a quarter, you could run sessions, say, on a quarterly basis across a 12-month period that, you know, are around cash flow, around goal setting, around strategy, with the context being around education. So improving people's sense of financial well-being, because they'll naturally feel more in charge of their finances. So really big opportunity for the right type of employees who want to make an investment in this space and bring in some experts.
Just on that, in regards to employment, a lot of people on the webinar have income protection. Is that going to change in regards to unemployment benefits? Because it's just taken on a whole nother level now, hasn't it?
What we would call the risk insurance or the life insurance industry is really in a state of flux at the moment, and they don't even have the answers around this. You know, for the most part, a lot of people don't realize, but there's only 3 to 4 reinsurers in the world, and then there are a lot of life insurance companies that I suppose are the shop fronts for those, so they take on their own individual policies. They don't really know what to do at the moment. So pre-COVID, a lot of life insurance businesses were losing money on the income protection policies that they were holding. People's propensity over the last 3 to 5 years to actually claim a lot more, as opposed to, you know, I suppose, suffer in silence. So they were already losing money pre-COVID. So, and it is an industry that hasn't evolved and isn't very innovative. So I don't have a definitive answer for that one. I'm really interested to see what they do, but I don't think, my gut says they won't bring an unemployment benefit that sits within an income protection policy. They'll just be carrying too much risk. And I think they'll see that for the premiums they can charge, they'll be paying out too much in benefits, unfortunately.
Okay, all right. We'll wait and see what happens. Hey, Jace, can you pick a bank, a financial institution that might be worth people getting in touch with, or you might be able to help people and push them in the right direction, a bank that you have found from your experience can deliver?
So short answer is there is not one solution for all, because it really does come down to people's individual circumstances. So across our panel, we have a breadth of lenders. I think we're currently accredited with almost 40 lenders. Yeah. In truth, across a 12-month period, we probably use anywhere between 6 to 10. It wouldn't be fair to nominate one lender over another, because it does genuinely come down to people's individual circumstances. Particularly at the moment, it's interesting where we might have had some favoured lenders late last year that suddenly have dramatically changed this year, in part because they've been impacted by COVID. So as an example, a lot of the large corporates over the last 3 to 4 months who had offshore overseas call centres and back-end services have hit some pretty rocky periods, because all of a sudden these call centres were closed down. And as a result, many of these banks have had to onshore their staff here, which has then had an impact because their frontline staff haven't been able to manage loan applications. Then throw in the fact that, which again has been great, a government initiative here to allow clients to, or bank customers to defer home loan payments. They've then had to subsequently set up additional call centres to field those calls. So some banks are managing them that much better than others. Probably the thing that I would say at the moment is one of the favoured, lenders that we see are those who have embraced technology best. So those who have systems and structures in place that have a lower touch, have less reliance on the onerous big corporate centre of 5,000 employees. They are currently the banks that are simply doing a better job. And to an extent, they've probably cut out a lot of the costs and can offer better deals as a result. So that was a really long-winded answer, but again, it depends on people's circumstances, who would be a favoured lender. We've got a huge range to choose from, and definitely worth engaging and reviewing at least 3, as well as your existing lender if you are already a mortgage holder.
And if anyone is uncertain, I do know a guy by the name of Jason Kloszynski who'll be able to help you out. It is nearly 10 o'clock, so we will wrap things up, but we will grab a takeaway, just a quick takeaway from each of our panelists, something for you to just to ponder over and moving forward. We'll start with you, Amy. Is there one message that you would like to pass on to those people who are logged on at the moment?
I'll just reiterate the same point of really turning towards your emotions and making friends with them. Try and figure out how to best communicate with them and soothe them so that you've got a wide range of guests at your party to calm yourself down so that the clever part of your brain can get more in control.
I'm seeing a different side to you, Amy, because I've heard a lot about parties and bouncers and having a good time. So that's terrific. I love the way that you have explained everything there. Thanks very much, Amy. It's been a real pleasure to get your insights.
Thanks for having me
today. Fantastic. Jason, what about you? What do we focus on?
Well, I think all of us have spoken about it today. It is engaging experts. Take the load off your shoulders. We're all... to one extent or another, we're all being challenged, and it's been a series of challenges for 3 to 6 months. Again, we talked about droughts, we talked about fires, we talked about COVID. We're all facing challenges. Some are bigger than others, but the reality is lighten the load. Use the people around you that are available to help and give you some reassurance and some guidance. I think that's the best path forward.
Yeah, terrific. Jason, thank you very much for your insights today. And Ryan, we'll finish with you. Words of wisdom to leave us with this morning.
I think what we see is a lot of people think that everyone has their financial lives sorted, and most actually don't. And they spend a lot of their time spinning their wheels based on that incorrect fact. So I think the opportunity for people, listening or watching today is to do something about this. Take the first step. Financial wellbeing, as we know it, is a journey and it's a practice. But what people need to do is just reach out, as Jace touched on. Reach out to an expert and start the conversation. Good financial advisors will really focus on the client or the family and what they specifically want, and then build a financial strategy off the back of that. So let's get rid of the misnomer. Most people don't have their financial life sorted out. So I'd challenge the people listening why don't you be one of the minority to take the first step and try and sort, or reach out to an expert and start the journey to sort it out for yourselves.
Ryan, I'm really glad that you said that, because I feel a lot better already. I really do. I think it was just me that was dragging the chain, but I feel a lot better. Thank you very much.
It's genuinely, it is most people, and they think everyone else has got it sorted. They're also worried about asking what they perceive to be a dumb question. That's why, the key things: inspire, educate, support. There is no such thing as a silly question, dumb question. I might know a bit about financial, or a lot about financial planning. A lot of other things I don't know a lot about. I just ask questions and start the journey.
Yeah, terrific. Great advice. Ryan, Jason and Amy, thank you very much. We really appreciate your time. To everyone that has joined us, thanks for taking the time out this morning to be a part of our wellbeing panel discussion. A reminder too, and you can see in the chat function there that Lisa's been looking after there, we'll have for you a link to the website, a link to all of the downloadables. It was all about informing you, all about your financial well-being, all about your mental health and well-being this morning, and navigating through a period that is new to all of us. So to everyone, thank you very much for taking the time. It's been a real pleasure. It's been a lot of fun, and have a fantastic day.
Thank you. Well done, Brad.
Thank you.
Well done, Brad. Thank you.
Thank you.